Frequency Podcast Network. Stories that matter, podcasts that resonate.
Did you do some online shopping this Cyber Week? If so, you may have noticed some new options during checkout. A growing number of online retailers are now letting you buy now, but pay later. Yeah, such don't pay a cent moves used to be exclusive to the realm of electronic shops and furniture retailers.
Make no down payments, no monthly payments, and do not pay for a year on everything in the store.
But no longer. Now you can finance literally anything. Highlighting this and calling for more government regulations of it is Tom Rakocevic. He joins us now on In This Economy. Tom is a member of provincial parliament for the NDP in Ontario. Tom, you can literally now buy and pay later for pretty much anything, right?
Even for a slice of pizza. Now, we're encouraging especially the younger borrowers by allowing this financial product to exist in the gray zone that it is. And so people are now using it for almost everything, and it continues to grow year after year, 30% a year. In fact, over 70% of retailers now offer this option. And of course, what you end up doing is layering credit. It still goes to your credit card. And many consumers might find themselves in a world of pain if they don't manage this.
So you're saying I'd be better off just putting the entire purchase price on the credit card right away if I don't have enough to pay outright for it?
Well, of course, that's the decision that consumers have to be made. But what I'm asking for is for this product to come out of the gray zone and to be properly regulated with a real regulatory framework. It's
like what? What do you specifically? What type of regulations are you looking for?
Okay, so if you think in terms of traditional banking products as well as credit cards, they all fall within federal regulations. This, on the other hand, is within a gray zone. So there's a lot that the Ontario government should and must do to bring in the regulations, such as perhaps requiring a code of conduct and essentially creating guardrails. Every single one of these providers have different varied ways of providing this product. Some may offer some interest, no interest.
Is there any limit to what interest they can charge?
Well, at present, it's, again, in a regulatory gray zone. So this is the exact kind of stuff that we want to get a handle on. We're being proactive with regards to this, and we want to protect consumers at all costs.
So that's something you're looking at, a cap on an interest percentage?
What we're asking for is to establish that regulatory framework, because this is a very different product than what you're seeing with regards to credit cards. So for instance, when a retailer offers this service and it's a credit card, they're looking at 1% to 3% that they pay on a transaction fee. And of course, these services can offer up to 8% of a transaction fee on businesses. So number one, this is going to disadvantage small businesses and it'll have an effect on them. This could actually add to the affordability issues we face and increase inflation, because the more and more people that use it, the more and more this is going to put pressures to increase the cost of products that are out there. And so this is something that's happening. Individual consumers may be putting themselves at risk and they may not understand it. And as a government, we need to step in and look at this product and see the effect that it's having in the market.
Can you give me an example of how an individual consumer may be taken advantage of here?
Right. So an individual consumer, first off, might decide that they want to pay in installments of a purchase that they have. In turn, this ends up on their credit card. So all of the challenges they may face with having over-borrowing and having large amounts of debt can still exist in the case of these products that they may not entirely understand. And so all of the issues that a person may face from over-borrowing or face when it comes to credit are going to happen in this case. But in the difference of credit cards, there are no guardrails here. And so we're asking for the government to step in, look at what this is doing to the marketplace, and to provide real regulations to protect consumers, just like other financial products.
It's an interesting new world with these products, that's for sure. John Halligan joins us now. He's a privacy officer and a legal professional. John, what do you see as some potential pitfalls with these buy now, pay later options?
For a quick overview, buy now, pay later is a brand of financing, often categorized as a loan, which allows the individual to purchase immediately and pay installments in the future. Products such as Afterpay, Klarna, Sizzle, and PayPlan make up a lot of the market in this area. The touted benefits of buy now, pay later are large. For consumers, there's claims that this democratizes borrowing, allowing people to have early access to forms of credit. For sellers, potentially there's a new transactions and a movement into digital service spaces that they didn't have before. Banks have entered this space to diversify their income streams, and because they also own the payment rails. But there are inherent problems in buy now, pay later schemes. As Tom mentioned, these are a regulatory gray zone. So while they are treated as loans, in practice, often buy now, pay later schemes end up on your credit card. Where are the issues here? There's the potential for consumers to overborrow, card shuffle, pay on one and use on another. And it weakens the claim that this is an alternative to credit. There is a potential unaccounted debt regime that can be built up by the individual. For the seller, major players have the capacity to absorb the costs of buy now, pay later schemes. Typically, a credit card runs 1% to 2%. These products may have the seller or the retailer charge 3% to 8%. Where are those costs coming out? We expect that the costs are coming out from the consumer. The main thing that I want to keep in mind is the demographic that is best targeted by buy now, pay later schemes, and that is younger borrowers, millennials, Gen Z. This space is saturated with younger people entering the market. Now, the capacity of individuals to perceive what the actual costs are and the perceived costs at this stage are very vague because there isn't clarity in the buy now, pay later market. So what are we going to do about it? What are the policy options that we can see? Well, we look around the world where there has been a massive growth in buy now, pay later, especially in the UK, the US, and Australia, and they've brought about a lot of different changes that show, number one, transparency. We do not have, in Canada and in Ontario, an understanding of how large the buy now, pay later marketplace is and how it is operating. That is number one. The other options include creating affordability assessments. Basically, buy now, pay later does not mandate that people can actually afford the things that they are purchasing. And there is an educational aspect of this as well, that there is a deficit in understanding what people are signing up for, when they're signing up for it, and what are the implications of their purchases. Without action on BNPL, we could create a new wave of consumer debt that is hard to track and mandate. It's not just about protection of the individual users, but ensuring that our financial system can handle this rapid change and the movement into digital financial tools that are happening. A sustainable market needs more alternatives to high-cost credit, but buy now, pay later schemes are just another form of credit that we can potentially do without.
Yeah, but John, is this not an important option for consumers? Let's say I wanted to buy a new TV. I don't have the cash for it right now. Let me just spread the cost over a few months. I mean, what are the pitfalls that I should be looking for here?
So there's multiple avenues in which the buy now, pay later company is going to receive their funds, right? So you can either sign up when you did this, if you signed up from a major online retailer, let's say, then you potentially signed up with your credit card or some link to your debit card. So debit cards, obviously, you're immediately taking out funds that you're already going to pay for. When you do it on a credit card, say it's booking your credit card every 2 weeks or every month, then there's the capacity to push that borrowing costs onto your credit. So the claim that there is no interest is true from the buy now, pay later product, but you're paying interest on your credit card. So you're just moving the payments down the road.
Well, the push is on here to have the Ontario government regulate these products, though it doesn't look like that's going to happen. It tells me the Federal Consumer Protection Act governs most personal and household transactions by consumers, including buy now, pay later. Though it says any complaints in the province will be examined by the government on a case-by-case basis. That's In This Economy. A reminder about a great new listening experience for you. You can listen anytime to In This Economy on Seeker. That's Seeker. I'm Richard Southern. Thanks for listening.